Hello everyone and welcome to the SBI Securities Weekly Wrap podcast. So first, let's discuss how the markets have been in the week gone by. Domestic equity markets managed to cross the key big events like US Fed meeting, interim budget etc. and closed in green during the week. Nifty 50 and Sensex were up by 2.3% and 2% week on week and have settled at 21,854 and 72,086 levels respectively. Broader markets outperformed with Nifty small cap and mid cap index up to the tune of 5.6% and 2.7% respectively. US Fed meeting outcome was in line with expectations where the FOMC maintained the status quo and rate cut expectations were pushed back to June 2024. Interim budget 2024 reflected government's intent towards capex-led growth with fiscal prudence, and populism was shunned despite this being an election year. No negative surprises on taxation front was cheered by the street. India's government bond yields cooled off following the positive surprise from the budget on the government borrowing front. So the aspects to look out during the next week are: next week, domestic equity markets will look forward to the RBI's MPC meet, which will announce its monetary policy on Thursday, that is 8th Feb. Stock-specific action may continue based on the outcome of quarterly results. Although street may be enthused by the higher capex number announced in the interim budget, the window to roll out orders is unlikely to be available during March 2024 to June 2024 period due to the election code of conduct and the subsequent new cabinet formation. To that extent, positive news pertaining to the order book driven businesses, especially those in strong momentum like railways, defense, renewables, etc., is likely to taper off post Feb 2024. Any flare-up in the geopolitical tension can act as a party spoiler. Investors are recommended to stick to quality large-cap companies and avoid taking over-leveraged bets as volatility is likely to remain high in the backdrop of no major domestic trigger. Now, talking about the weekly sectoral gainers and losers on BSE. Except for BSE cap goods, consumer durable and FMCG, all other sectoral indices ended on a positive note. The BSE oil, PSU, power, metal, auto, realty, healthcare, banking and IT were the biggest sectoral gainers with weekly gains of 9.5%, 8.2%, 5.6%, 4.5%, 4%, 3.8%, 2.4%, 2.4% and 2.3%. While cap goods, consumer durable and FMCG were the sectoral losers with weekly loss of 1.5%, 0.4% and 0.2%. Talking about the weekly Nifty 50 gainers and losers. The top gainers in Nifty 50 during the week were BPCL, Power Grid, Adani Ports, ONGC and Adani Enterprises. While top Nifty 50 losers were L&T, Titan, ITC, Bajaj Finance and Bharti Airtel. Taking a check on some key monitorables. Both FI and DI's net bought rupees 822 crores and rupees 10,103 crores in the cash market during the week. Brent crude decreased on week basis from $83.55 per barrel to $78.68 per barrel, which is a drop of 5.8%, which showed signs of easing geopolitical tensions. US 10-year bond yield has cooled off and is trading at 1-month low of 3.9%, which augurs well for risk assets like emerging markets and commodities. Coming on to the key domestic and international economic news. So fiscal deficit estimated at 5.1% of GDP in FY25. So this is positive sign for the market as the earlier expectations were 5.3%. So it is focused towards fiscal prudence. Second, the India's manufacturing PMI at 4 months high. The India manufacturing PMI for Jan 24 stood at 56.5, increasing from its 18-month low of 54.9 in December 23. So the manufacturing activities were maintained and the companies are expected to benefit going ahead. India's core sector growth slows to 3.8% YOY in December 23. So the India's core sector index grew 3.8% YOY in December 23, which was down from 7.9% YOY growth recorded in November 2023. And last, the US Fed rates remain unchanged. The Federal Open Market Commission unanimously voted to leave the benchmark interest rates unchanged at 5.25% to 5.5%. Coming on to the corporate developments, so over here we'll be talking about the companies which have been focused during the week. So first is Larsen and Toubro. So its 3Q FY24 consolidated revenue EBITDA PAT grew by 18.8%, 8.2%, 17.3% YOY to rupees 55,128 crores, 7,199 crores and 3,595 crores respectively. The EBITDA margin dropped 60 basis point QOQ and 50 basis point YOY to 10.4%. So overall, the numbers were weaker as compared to the market expectations, and the margin contractions was due to the revenue mix being unfavorable and rising commodity prices. Then next is Sun Pharma. So its 3Q FY24 consolidated revenue EBITDA PAT grew by 10.1%, 15.8% and 16.5% YOY to rupees 12,381 crores, 3,477 crores and rupees 2,561 crores respectively. EBITDA margin improved 201 basis point QOQ and 136 basis point YOY respectively to 28.1%. So Sun Pharma declared strong set of numbers. So positive for Sun Pharma in short term. Kalyan Jewellers, so its 3Q FY24 consolidated sales EBITDA PAT grew 36.2%, 33.5% and 21.5% YOY to rupees 5,223 crores, 370 crores and 180 crores respectively. Gross and EBITDA margins dipped 36 basis point and 14 basis point YOY to 14.6% and 7.1% respectively. So decent set of numbers declared by Kalyan Jewellers. Positive for Kalyan Jewellers in short term. SRF is 3Q FY24 consolidated sales EBITDA PAT declined by 12%, 32.2% and 50.4% YOY to rupees 3,053 crores, 566 crores and 253 crores respectively. EBITDA margins contracted by 551 basis point YOY to 18.5%. So weak set of numbers declared by SRF, negative in short term. Bajaj Finance is 3Q FY24 NII, PPOP and PAT grew 29%, 27% and 22% YOY to rupees 7,655 crores, 6,142 crores and 3,639 crores respectively. AUM grew 35% YOY to rupees 3,10,968 crores, while GNPA and NNPA improved 19 basis point and 4 basis point YOY to 0.95% and 0.37% respectively. So weaker numbers declared by Bajaj Finance than the market expectations. So marginally negative in short term. KPIT Technologies says 3Q FY24 consolidated revenue EBITDA PAT for the quarter was up 4.8%, 7.7% and 10.9% QOQ to rupees 1,257 crores, 259 crores and 157 crores respectively. EBITDA margin improved by 60 basis point QOQ and 210 basis point YOY to 20.6%. Strong set of numbers declared by KPIT Technologies. So positive for the company in short term. And the management commentary stated that there is no slowdown in the growth. So overall positive for KPIT. Next we have Maruti Suzuki. So it reported its highest ever monthly sales of 1,99,364 units in Jan 24, which was up 16% YOY and 45% month on month. So positive for Maruti in long term. Mahindra and Mahindra, it reported monthly sales of 43,068 units in Jan 24, which was up 30% YOY and 22% QOQ respectively in its PV segment. The company's CV segment reported sales of 23,481 units, which was up 8% YOY. However, experienced 17% degrowth to 23,948 units in the tractor segment. So overall positive for Mahindra and Mahindra in short term. Tata Motors, it reported monthly sales of 54,033 units, which was up 12% YOY in the PV segment, and 32,092 units, which was down by 2% YOY in the CV segment in Jan 24. So overall positive for Tata Motors in short term. TVS Motor, so the company reported monthly sales of 3,29,937 units in Jan 24, which was up 25% YOY. So positive for TVS Motors in short term. Bajaj Auto, it reported monthly sales of 3,08,248 units in Jan 24, which was up 27% YOY and 9% month on month respectively. So positive for Bajaj Auto in short term. Hero MotoCorp, It reported monthly sales of 4,33,598 units in Jan 24, which was up 22% YOY and 10% month on month respectively. So positive for Hero MotoCorp in short term. 197 Communications Limited, which is Paytm, it has been directed by the Reserve Bank of India to stop accepting deposits, top-ups in the customer accounts, wallets, FASTag and other instruments in Paytm Payments Bank. So negative for 197 Communications in short term. KPI Green Energy Limited. So the company unit has received a new domestic order of 5 megawatt solar plant from Messrs Skywind Paper Industries Private Limited. So positive for KPI Green in short term. Now coming on to the pick of the day. So this is one of our product pick of the day where we have given a call on Glenmark Life Science at a CMP of rupees 840 with a price target of rupees 924. So Glenmark Life Science is a leading manufacturer of high quality, affordable active pharmaceutical ingredients API. Additionally, it also leverages on its process research, analytical research and chemistry capabilities to provide CDMO services to a range of multinational corporation and specialty companies. So the growth driver for the Glenmark is that it expects its cardiovascular, central nervous system and anti-diabetes portfolio to drive growth in the coming quarters. In the CDMO space, the company expects to quadruple its bottom line in the next 3 to 4 years and is expected to contribute towards higher margins. The company has also signed a multi-year definitive agreement for the supply of APIs, which is expected to commercialize in FY25. It derives 81% of the revenue from the regulated market. Moving on to the valuation, at the current price, the stock trades at FY24, FY25 consolidated PE of 18.5 and 17.5 times respectively. And the company is confident of delivering quality growth led by leading visibility in the CDMO business and strong ex-Glenmark Pharma order book. Then coming on to our another product, which is pick of the week, where we have given buy call on Bank of Baroda at a CMP of rupees 257.5 with a price target of rupees 296.1. So Bank of Baroda was incorporated in 1908 as a privately owned institution headquartered in Vadodara. It is amongst the India's 5 largest banks with large franchisee and relatively larger international presence, strong capitalization, superior liquidity and asset quality metrics. So the key growth driver for Bank of Baroda is that the cost of higher price bulk deposits was decreased during 3Q FY24, which was supported by stable domestic cost of deposit at 5%. So this led to a positive surprise in the reported net interest margin, which increased by 3 basis point QOQ to 3.1%. The management has maintained its margin guidance of 3.15% range for FY24, mainly led by moderation in the bulk deposits. Coming on to valuation at CMP, the stock is trading at a price to book value of 1.2 and 1 time of its FY24-25 book value per share respectively. So the valuation appears to be reasonable and offers favorable risk reward for medium to long term investors. Next, so for corporate actions for the next week. So for key corporate actions in the next week, kindly refer to our weekly wrap report. The link to view the report is shared in the description box below. So this was all about the weekly market podcast. Thank you for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.